Hi everyone, I'm Lauren from Pathways Education. In this presentation, we're going to be covering stocks. The first step in today's pathway will be understanding what exactly a stock is. Stocks may seem complicated and scary at first, but hopefully by the end of this presentation, your opinion will have changed. So a stock is an investment that represents partial ownership of a publicly traded company. A public company is a company whose ownership is organized into shares of stocks that can then be bought and sold on a stock exchange. However, not all companies are public companies. Some companies are privately owned, which means that they don't offer any shares of stock. For public companies, shareholders' equity represents how much of a company is owned by its shareholders, the people who own its stock. As a result, shareholders' equity equals a public company's net worth. So let's clarify this concept with an example. So let's say some company has a net worth of $1 million. That company issues some stock, and our friend Adam here decides to buy 20% of the company's stock. His four friends, Peyton, Mary, Sam, and John, buy the other 80% of the company's stock. At this point, Adam and his four friends each own $200,000 worth of stock. Another year passes by, and suddenly that company makes it big. Everyone in town seems to be drawn to their products, and as a result, their sales skyrocket. And suddenly the company's net worth has increased to a value of $1 billion, 1,000 times its original value. Now, because Adam owns 20% of the company's shares, Adam's expected returns have shifted from 20% of $1 million to become 20% of $1 billion. Suddenly, Adam's stocks also just became worth 1,000 times what they were the previous year. While investing in real life is not nearly this simple, this example allows for us to understand how investing in stocks can be a great way to make money quickly and efficiently, as long as your money is put into the right places. The next step of our pathway today is understanding what the stock market is. The stock market is a place to buy and sell stocks. In the United States, there are numerous different stock markets, each with a different set of criteria. The two primary stock markets in the US are the Nasdaq and the New York Stock Exchange. So Nasdaq stands for National Association of Securities Dealers Automated Questions. It's a completely electronic trading market, which means that no stock trades are done physically. Instead, computers perform the intended transactions for us. The Nasdaq is also a dealer market, which means that participants must trade through a dealer as opposed to directly with each other. With 2,300 companies listed, the Nasdaq has a market cap of $10 trillion. Market capitalization is the dollar value of all the shares of stock that are available on the market. Generally speaking, stocks listed on the Nasdaq are more volatile compared to ones that are listed on the New York Stock Exchange, meaning they experience more sudden, unanticipated changes in value. The New York Stock Exchange differs primarily from the Nasdaq as it's an auction market. This means that individuals can directly make transactions with one another. Furthermore, while it's not really used in practice anymore, the New York Stock Exchange has historically featured trading floors where trades can be conducted in person instead of completely electronically. There are 3,300 companies of all different sizes listed on the New York Stock Exchange, and currently the market has a market capitalization of 29 trillion. We won't go too much into this, but there's also many international stock markets, such as the Shanghai Stock Exchange, which has 1,561 companies listed and a market capitalization of $4.7 trillion. In order to understand how a stock is performing or how it's expected to perform, people oftentimes turn to stock market indexes. These indexes measure subsets of the stock market to calculate market performance. In the US, we have three primary indexes. The first one is the S&P 500. I'm sure many of you guys have heard the term thrown around, but the S&P 500 stands for Standard & Poor's 500. It measures stock performance of the 500 largest companies and represents 80% of the value of the US market. The Dow Jones Industrial Average, on the other hand, measures the stock performance of the 30 largest and most influential companies. It represents 25% of the value of the US market and represents changes in investors' expectations. The Nasdaq Composite is the last index that we're going to talk about, but it's an index of all stocks that are traded on the Nasdaq Stock Exchange. It's known for being very tech heavy, which means many of the companies that it features are technology companies, and includes many large and small companies. So that takes us to the last step of our pathway today, which is investing. So now that you know a little bit more about stocks, I think it's time we talk about why it's important to actually buy them. As we saw in the example with Adam investing in stocks, it's an extremely quick way to potentially grow your money. Businesses can take off overnight. If you put your money in the right place at the right time, it could grow at rates faster than most could dream of. Secondly, stocks are mutually beneficial. When you buy a stock, you're helping that company raise capital, which can then be used to pay off their debts or to increase the company's productivity and capabilities. And lastly, it's so easy to do. If you guys remember our presentation on saving, you'll recall that there's many easy ways to set some money aside. One great way to get into investing is to start saving small amounts of money at a time that you will eventually then invest in the stock market. Now, you may be wondering, how do you actually access the stock market and invest in stocks? Well, the first step would be open a brokerage account. There's so many options when it comes to brokerage accounts that we won't get into the nuances of them today, but basically a brokerage account is an account that can be used to sell stocks along with other forms of investments. Like a bank account, you can put money into and take money out of a brokerage account. So to conclude today's presentation, we're going to play a little game. Imagine it's 2011. You started a small business selling phone cases with your best friend, and you have $1,000 to invest in any of the following stocks. Your job is to pick the stock that you think will be worth the most money 10 years down the line in 2021. While in real life, there are many considerations that go into which stocks people invest in. In fact, it's a full-time profession to help people invest. I want you to just use what you know about each of these companies to make your best guess. Think about things like how big these companies are, the importance of what they do, and how popular they are, things like that. Okay, so here are your options. We have Netflix, an online entertainment platform that I'm sure many of you guys are familiar with. Ulta, which is a beauty store. Amazon, an online marketplace where you can buy basically anything you can think of. United Airlines, the airline company. And last but not least, Google, which once again, I'm sure many of you guys are familiar with. Okay, ready? As you can see here, investing in the right company can lead to massive amounts of money. If you chose Amazon, that $1,000 turned into $18,904. And you didn't really have to do anything in order to do that. On the other hand, if you chose Google, you can only expect $74 back. You can see from this game, once again, how stocks can be extremely beneficial to those looking for ways to grow their wealth. However, investing in stocks does come with a considerable level of risk. While the goal with investing is for companies to do well and for the value of shares to grow, the opposite may very well happen. We hope you found this presentation helpful. If you have any comments, questions, or suggestions, please leave them in the comments and we'll make sure to get back to you as soon as we can. Follow us on our social media and be the first to know when we upload new activities and videos. Finally, visit our website at www.guidingpathways.org to start your journey on a new pathway today.